Hello, I'm Liz Lumley from Finextra, and we're at EBA Day in Berlin. And this afternoon, I am keeping Hayes Littlejohn from UBS and Alan Taylor from EBA Clearing from their afternoon drink. So I greatly apologize, but it's all worth it because we're going to be talking about intraday liquidity. So Alan, I'm going to start off with you. You just came off the panel talking about intraday liquidity. So I wanted to know what role sort of clearing and settlement has in the efficient management of intraday liquidity.
Well, very much so. We are now being driven by legislation coming out, and there's been a recent document just published by the BCBS, the Basel Committee of Banking and Supervision, on intraday liquidity monitoring. And for me, what that has meant for my particular clearing and settlement system is that it's a bit of a fillip, because netting systems as such and systems that have a better and more efficient use of liquidity are starting to look far more attractive now, because there's going to be a price for liquidity and banks are going to be looking for ways of minimizing what they do. And in a system like Euro 1, we have created something called a liquidity bridge with the ECB and Target 2, which is a way of recycling liquidity through the two systems. And interestingly, in the document I just mentioned, this BCBS document, liquidity bridges are seen as a very good thing. It allows liquidity to be turned over much more. And perhaps I could just add here that our colleagues in the clearinghouse in New York did some modeling about how in the various types of systems the units of currency turn over during the day. And on RTGS systems as a whole, they worked out it's 5, 6, 7 times a day on average that the unit of currency turns over, depending on the liquidity savings mechanisms applying. Now, in chips itself, a dollar turns over 25 times per day on average. So in EBA Clearing, we did a similar exercise. Firstly, we found that a euro was turning over 11 times on average in our system. We made a couple more distribution windows in our liquidity bridge, and that allowed the euro to turn over 14 times. So what that actually means is that other systems can offer a factor of 3 to 5 maybe in terms of how much business you can do against the same amount of liquidity. So I think from our point of view, we're in pretty good shape, and we can offer the banks a very good means of managing their liquidity through our system.
Okay. So Hayes, I'm going to turn to you with bankers' favorite topics, which is regulation and of course the new Basel requirement. So coming from a big complex bank like UBS, how do you respond to these new requirements?
Well, the requirements you're referring to have multiple facets, from the Basel III liquidity coverage ratio, net stable funding ratio. These are explicitly not looking at intraday. Instead, there's been a paper from the Basel Committee on Banking Supervision, which looks at liquidity monitoring tools, and that is geared towards intraday liquidity usage. And what it is a framework, a reporting framework, which we're required to submit, which shows how we're using intraday liquidity for various types of businesses, how the flows go intraday, and to provide a certain kind of transparency that they can use to monitor the health of the system, and to then make sure that it continues to flow on a fluid basis.
Okay. I'm going to finish off with a question about data. So I'll go back to you, Alan, and then I'll finish with you. Sort of the immense amount of complexity in dealing with data in banks. And I think someone asked a question from the audience about Target 2 securities and about how the data goes poof. So what are some of the data challenges with this?
Well, what we will have to prepare for is providing much more individual bank information. Today in our system, we monitor the system performance as a whole in terms of a code of conduct, i.e. the volumes and values going through during the day. But what the banks will need, what Hayes, UBS and so on will require, is input on their position in our system, and indeed in all other systems, going through the day. But we need to find out, not just from the banks what they want, but from the regulators. The key thing is trying to get standardization across all the regulators in what they want to see in terms of intraday monitoring. So for us, there'll be a challenge in The data is there, but it's extracting it in a manageable and a presentable way for our users.
Okay, yeah, so what are the data challenges in your view?
Well, the biggest thing is to make sure that the providers like the EBA Clearing or Target 2 or CHIPS or the Fed or anybody else that provides data can do that in a way that fits the bill for what they're asking on the other side of the same institutions in some cases. And to the extent that they could standardize that, that would make our process easier. The challenge is when each local flavor, each jurisdiction requires its own local flavor, and then we're required then to customize that. That has not only a cost and effort on our side, but also a cost and effort on the central bank side, because one of the drivers for this was the crisis, where they wanted to be able to look at positions of banks across systems globally, especially the global banks, with a mouse click, basically, and to the extent that we get fragmentation in data requirements, that will be much more difficult for them to achieve.